So it's very obvious that we are stuck in limbo. We've got two equilibrium price points here, and we failed to touch any of them really. The Monday, 3rd June 2024 weekly candle took buy stops, traded into a weekly bearish order block, which was the last up close candle before the sell-off. That took sell side right there. We traced into it, sold off, took sell side again, traded up to the upside, failed to get to that area, but we took buy stops, traded into that area before selling off. We closed just shy of the lows of the Monday 27th of May weekly candle, and obviously the prior week after the week after that we run on sell side and we traded into all of these baskets of bullish candles right here. So you can see we've been bearish for 3 weeks. The dealing range low is located at 1.06011. We've got an order block located right there. We've got the highs off that order block, which could be used as an area, a significant area of interest, but is not mapped out on the 106.409, 106. One oh six 398. Actually, a very important area which I never mapped out. Don't know, I spotted it. So 106.3. No, so just it's great. Okay. Sold off into the order block, took buy stops right there. Final hit, and then now we'll be looking to take out sell stops. So the first point of interest would be 106.399. Second point of interest would be 106.011, and then we'll be looking to target these depths right there at 104, 1.04059. But with dollar index running to 106, we could expect the lows at 106.04, 1.06011 to be run on. Just going to the daily time frames now. Monday, inside day, which was the first trading day of the week. We attacked the Friday's high on the Tuesday. We traded, maybe didn't really get to the 50% mark really. Traded maybe 25% of the way, 30% of the way, but the candle body closed within the Friday's high, Same goes for Wednesday and Thursday. Thursday we sold off, took sell side, we created an imbalance in price right there. Right, it took 2 days worth of sell stops, and we traded into a BISI, which is located right there. That's been respected numerous of times, apart from this candle here. Right, even then, you could even argue and say that it's traded into a down close candle, the last down close candle before buy stops was taken, which would be considered as an order block. So this area would still be important going into the future, which you can see there and there. But I do believe that going into next week, we could look to target the lows, which is at 1.06710 and 1.06676. First point of interest would be 1.06710. Second point of target 1.06676, and we're gonna end with the 1.06399 order block for the week. Low, high, discount. I'm going to be aiming for lower prices. As you can clearly see, this is this week's price action. We've got the open. So right there, we've got open, brief discount in price. Took sell side, traded into an order block right there. Rejected, rallied to the upside, taken buy side out, two down close candles, no imbalance, so everything is fairly balanced. Imbalance in price action, which we got right there, but we ran off and took sell side over there. Traded above a higher time frame array, which is the order block. Remember, this is support. This is supposed to be the bullish order block, as in once price gets down to this region, it's supposed to support this area before rallying right back up to the upside. But we failed to get that, so it's an inverted order block. So once we get this rallied right back down, failed, but then we shot right back up, took buy stops, gap, filled, highs, failed to take. Once you got this shift in market structure, it's not really that important, but it's really 1 and 2. These two candles confirm that there was a good chance of us going back to the downside. Got a gap right there, which has been filled right there. Anyone looking to place longs, shorts, sorry, from the London going into the US AM session will be able to place their stop losses above there and look to target these lows there, which we got. Lows, failed to take these lows out. So what we could expect going into the future, remember, the week lows is here, but that was taken with Friday's London session. So what we could expect going into the future, I do have an area here that I've mapped out. I do believe that is very, very, very aggressive for us to see something like that, but something like this would be very aggressive. My goodness. Oh no. So I'll be looking to target. The first point of interest would be the weekly highs. Okay. I'm going to still keep 108, 167 as a point of interest, but we're going to start off with the weekly highs at 1.07614. That's very aggressive, but what I'd like to see is something like that pan out. The narrative, the intraday narrative, is what I'm not going to get into. So maybe when you see a run on short-term highs, we could see a rejection into this bullish order block and higher time frame. Remember, this is an hourly time frame, right? Inverted fair value gap retracement. Then you could run and take buy side at 1.07614. But then the overall target is to target this area there. So it's the 1.06399 area. But something like this, my goodness, that is aggressive. I'll be looking out for that anyways, but I'll be looking at the very, very first point of the major first point of interest would be the weekly high. So it would be this week's high, which is at 1.07614. Obviously, we do have a high time frame bias, high time frame discount array, premium array at 1.07200, and obviously the hourly fair value gap, which I expect to be turned into an inverted fair value gap to be the springboard to take out buy stops. If this is going to be the manipulation, as far as that, we could even get something like this, run into this area here, and then obviously retrace to the downside. So I'm expecting worst case scenario, really. This is extreme case scenario, but something like this would be something I'd expect to pan out. This would be going into the second week's highs, pretty much. In fact, the highs is up there. So I'll be looking out for that. Short throughout the week. And yeah, it's looking good, man.